Thanks guys. If you're watching this video thus far, we're currently up 34%, 53% win rate. Very good, very happy with that. July started off really well with straight up just a win. We're looking at a 3% additional, so 34% all up. So yeah, pretty good. Trading London only. We'll continue on this journey, hey? So I'll try and smash out the rest of July now. Let's do this. So I applaud you if you've actually taken the time to watch all these backtesting videos, because seriously, I'm just mainly really just doing it for me. I'll get rid of these. Might get rid of these grid lines. Canvas. Grid lines. Bang. Bang. Don't want that. So I like just pure white. I like to zoom out a little bit, so we'll go to the 4 hour. So looking at the 4 hour in terms of like zones, this looks like nice. H4. And then from there, you know, I guess you could look at this overall section here as an actual area too, but I'll just say this is like the structure there. Price has just dumped down from that point, and there has been no like real swing low yet until price does something like this. Then I can label this as like a low, and this is like the high. So price is just still dumping at this point, but we are expecting at some point for structure to change, and then price to continue on up. Looking at the 4 hour candles, do we have a chock? Yes, we do. So we've got a 4 hour chock. So that could be signaling that the swing pullback is about to begin. Yeah. So we could be looking bullish at this point. So I am seeing an argument for both bullish and bearish. This is like the most recent swing, little internal structure. This is then internal structure again. And then that little internal structure broke. So we are now looking for buyers about there. Sell probably. I guess it's tapped into that zone now. We have a fake break liquid. No, we do not. We don't have a liquidation there. Hang on, do we have something here? Yeah, we would. We would. About there. There we go. That candle's massive, and it's also at 5 p.m., so I can't take the trade. Okay, that's good. Looking at this trade, as price is just dumping down, it's reacted perfectly off our sell zone. Maybe we should have taken the trade. How big was the candle? 20 pips. Yeah, I'm good. So yeah, a 20 pip candle, probably not going to trade that. Looking at my previous backtesting, like this is the zone that I'll look to buy from, but at my previous backtesting, I learned that if there's a massive amount of momentum hitting a zone, probably not worth jumping in. So that is what I call momentum, bang, 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 down. So it can win, but just according to my backtesting, it just, when price is hitting a zone hard like that, I normally don't take the trade. However, maybe this is a situation where it was worth taking the trade. So what I might do is I'll just what I'll do is I'll record this in my backtesting journal, but I won't actually record it as an actual win, because so this would have been the entry candle. Price would have tapped me in. If I go 0.5 pips, which is 9.6, which is 9.1, I would have been wicked out anyway if I entered with my current rules. And then it ran 32 pips. I'll go next London session. Yeah, so it ran pretty hard. I'll go up to there. So Yeah, I'll log all that anyway. That would have been a loss anyway, even if I took the trade with a 0.5 pip stop loss with my current setup. I would have lost anyway. So we'll go 8.6. We'll go date is 30th of July. So I would have lost, but yeah, 17.25. Euro USD, LC2A, medium. Let's say that's a phase B trade. That's 8.6. And for it to be counted as a win, we would have needed a stop loss at 1 pip. So it'd have to be an additional 1 pip plus a little bit extra for spread or whatever. But it ran a total of 85 pips. So I would have been lost anyway. That's alright, so I'm glad I kind of didn't jump into that, following my current trading setups, but I'm always looking to refine my edge. We'll look at, okay, this is looking at buys. This has all been mitigated, that's all been mitigated. So now we're kind of looking for sells from this zone. For me to consider this zone a bit more high probability, I want it to break this low. So I might not take the trade on that. Okay. Now I consider it that phase A, because this structure here is now bullish on the little swing structure. It's hit the extreme, and then now it's broken structure to the upside. So now this is phase A. Tapped into our zone. There would be no fake break liquidation within here. Let's just slowly label this so we can see if we're not going to catch a win. Bang. If it breaks this low, we can look for a buy. Oh, close. Close. Is 2050. Definitely we should be looking for a buy right now. It's 9 PM. Let's go for the buy. So that's 3.7, 4.2, 3 to 1. Pretty small little trade. Limit. It worked out. So that was at 2050. Let's label that. So that's 3.7. 14th of July. That's 2050. London, Euro USD. Phase A. Oh, phase A is generally high probability. We'll consider high probability 3.7. To win the trade, we would have had to go. Let's just see how far it ran if it did react. No, it failed. That's alright. Yeah. So, stop loss. We've still lost anyway. Went 2.7. So I go 0, 2.7. I guess a good learning here would be looking at the loss. Why did it lose? So price hit our zone, reacted, shot up, and then now that zone should have been cleared as mitigated. So me placing that trade was kind of dumb because price should have created my entry model of creating a fake break before hitting my POI, and then it's hit the POI, and then that would have been the trade. But it didn't create the fake break for me, so I couldn't have entered. But then since that zone's already mitigated, I now should have counted that zone as done. But instead I got greedy and was still looking for a trade on that zone, even though the zone was already mitigated, already created a move and then failed. So I'm going to write that down as a mistake. Zone didn't create LC2A. Then the zone reacted, created a new high. Now that zone should have been considered mitigated. Should have created the entry model before hitting the zone. FOMO trade. So yeah, so it was a fear of missing out trade. It was FOMO. So it wasn't really high probability. It was medium. But yeah, because it was phase A, but I should have really been patient and should have known better that that zone was mitigated. Okay, on to the next one. That's right. We can make mistakes. That's what we're doing this for. Next session. Okay. So I'll consider this our high of this little section. I'll consider this the low. Actually, it didn't break the low till here. That was the swing structure. Hit this zone, mitigated it, reacted, bang, hit off it again, bang, hit off it again. Let's zoom in. This zone here was mitigated. This zone here got mitigated. Price came up, bang, tapped into it, mitigated. I'm not really seeing any sells right now. Not really seeing any buys either. Just wait patiently for a new zone to be created. Okay, these zones have all been mitigated. I can see money sitting here. I'm expecting for price to then continue on from this zone here. That's my trade idea. And then I'm expecting price to hit, that's been mitigated, one of these more higher up before continuing on down. This is 1, 2. It's outside of our time zone. Let's continue on. Okay, beautiful. So it looks like it's hit the extreme of our zone. It's hit the extreme. Broken down structure. Now it's pumping up. So could maybe look for buys. But if we're following swing structure overall, this technically should now break this low and continue on down, and then we're looking for zones. So right now we're not looking for anything. Okay, it's broken the high. Beautiful. We can look for buys. Let's look at the 4 hour. What's happening there? So the 4 hour now is creating that swing pullback. So we're expecting price to do this to these higher zones and then continue on down. So we are currently bullish on the lower time frames. Let's continue on. Got a new high. I'll consider this a new zone now. Decent little new zone. Okay, it's hitting our zone, but it's outside of our trading time. Let's continue on. Reacted well off our zone, which is good. This is our new range. Prices hit our range. Now continuing up, we can take a buy from here. This is a good zone. I'd also consider this a zone 2. However, it does look like price has gone up, mitigated it. Price gone up, mitigated it. So I feel like this would be the zone. But I have seen zones like this react still. Okay, this is a tighter little range, a bit more lower probability. No, didn't hit it in our time frame anyway, so that's alright. Next. Okay, so it's mitigated our zone. This is still our little range up here. Mitigated, mitigated, mitigated. Broke that. Now I'm expecting this high. This took this and also swept this. So let's just create the story for us. So this zone here swept this low and then took out these highs. Now I'm hoping that then from there price will come down, hit the zone and then continue up. So this is swept the lows and then flipped. So I'll consider this a good zone. Okay, smash through it anyway. So now we go, okay, this then swept all this liquidity up here. Now it's sweeping all these zones here. A strong sell opportunity here. If not, we're still, all this stuff is still in play. Yep, okay, so we're still in play. And we're out of our zone. Okay. So, now within our little swing structure here, we've got price still expected to come down to this overall area. Price center's created this high, which I guess you could argue maybe has been mitigated, and then price has come to here, come down, mitigated it. So I normally see zones like this hold, something like this. Liquidity sitting below here. So maybe price dump down, take this liquidity, and then from the zone leap up. I see that happen quite often. Okay, it's coming close. Not in our time frame. So, have we over refined ourselves? Should we have done the candle here? Maybe we have. Yeah, maybe we over refined it, but oh well. It's just sometimes it's not going to hit our zones, and life goes on. So price now swept this low, created a new high, closed above up here. So swept the low here, created a new high up here. So now we are looking bullish. Whereas the next unmitigated zone bullish was here, price came here, mitigated it, now created a new zone here. So now we're looking for buys. Smash through it, perfect, that's alright. Smashing down. We are now looking bearish. This is our bearish new swing structure, 15-minute. We're now looking for sells from here. That's outside of our time zone. Next. Okay. This is still our swing high. This is now our main zone. Price is now, I guess, mitigated it. Now it's starting to dump down. This zone here has been mitigated. Now we're looking at this. Start of London sessions, now mitigating that. Smash through it, swept the high. Swept the low. This, I guess, technically isn't mitigated yet, according to my super refined strategy. So if it hits this level here, I'm actually looking to sell. This zone right here, this looks like a buy opportunity. So sell from here or buy from here. Okay, hit our zone. Has there been a fake break liquidation? Yes, there has been right here, perfectly right in front of our zone. What time is it? It is 21:30, so I can't take the trade. Damn. And it was a perfect trade too. Look at that. Would have been perfect. So technically we are bearish on the swing structure. Price has mitigated this zone. Price has now mitigated this zone here. Then from there mitigated that. So we're looking for a sell from here. And we're looking for a sell from here. Bang. No fake break liquidation within there, so I can't take a sell. Bang. Fake break. Create a new low but, so I can't take that. Price is just dumping. Yeah, nothing to work with there. Oh well, next session. Okay, I love price action like this. That's beautiful. Price swept the high. This is the new zone. That's like a sweep zone. I kind of want it to take a little bit more before it goes down, but I'm kind of, yeah, can't help that. Okay, that's a sell signal. So price has come into our sweep zone. It's created the fake break here. Swept the high of that high, which is here. Now we've got to ask ourselves, is this really going to go down? Ideally, I'd like price to get up here and hit these areas before continuing on down. Has it done a fake break liquidation? Has this sweep here actually broken any decent lows? It's not that strong. I'd say this is more medium to low probability. Obviously, with price just mucking around in here, I'm feeling that I want to take the trade. And we'll see how it goes. 13.6, so we'll go 14.1. It might not enter, which is good. I'm hoping it doesn't enter if it's wrong. Sometimes you gotta go with your gut a little bit. Okay, we're in the trade. Could easily be a loss. Okay, fair enough. It was more medium to low probability anyway, so we'll go 27th of July, 22. I'll accept that. 1935. London, Euro USD, LC2A, low probability. I'll go phase A. That was phase A2, so it's lower probability. In terms of candle 14, that was 13.6. And it only ran to 3 pips. 3 to 0 and then 0. Okay, another learning. Entered a sweep zone. Phase A2 without any break of considerable lows. Got induced into a sell. Sell that wasn't a strong high. In future, try not to trade sweep only zones. Yeah. So these two losses here were just straight up mistakes. one, it didn't actually, like, it mitigated the zone, shot up, created a new high, and then broke. I shouldn't have taken that trade. And then also this zone, the reason why that failed is because normally when I'm looking at zones, I'm hoping for it to take a considerable low like this. So like ideally, when I see something like this, like it price does that, sweeps the high, and then shoots down, takes out a low, and then once it comes back up here, it's considered strong because it took out a strong liquidity, continuing on swing structure. But this, I kind of got FOMO jumped in as I saw our entry model. Yeah, because it broke the high, right? Yeah, like maybe we could have. Yeah, there was no buys there, but I should have just been patient. So we'll go to the next session anyway. I'll remove drawings. So yeah, so price then broke that. If this was during London session, a sell here would have been ideal, something like that. That would have been a stronger high. Price shot up and broke that anyway. So now this is what I consider the zone. See how it like broke like a strong high, so that's a zone I can buy from. This then created a new range. This is a zone to buy from. That's seems to be just sitting in liquidity. Obviously, if I see an entry metal on this, I'll buy, but it looks like it's mitigated now anyway. Yep. Okay, it's hit our zone. Has there been a fake break? No, there hasn't. So we can't enter, unfortunately, which sucks. Okay, fake break's being completed. So there's been a fake break. This is our zone. It's 2015. We can look for a buy once it hits it. Bang. Okay, we can look for a buy. This is buy time. Okay, this made a new low. 7.2, so we'll go 7.7. We'll go 3 to 1. Buy. Should we take this trade? But I'll consider momentum's going quite down. This is a strong sweep of liquidity. It's a bit of a risky trade. Oh well, we lost. Yeah, so again we weren't wrong, we just got induced early. When was this trade? At 2050? Again, I'm kind of noticing these later trades at 2050 seem to be a loss. So that's right, this is why we backtest, right? We make mistakes. 7.2. 28th of July. 2050. This is good. I'm gathering more and more data to add to my trading plan. What phase is this? Phase B. And then how far did it go? Not very far. 5.9 pips. Okay, so let's look back. There was a 2050 we entered a trade, 2050 we entered a trade, both losses. 2050, another loss. 2045, a win. 2020, a loss. 2025, a loss. 2045, one win. 2025, a win. 2020, 9 p.m. So most of the time, like if we look at the entry time, A to Z. So 2050 plus just is the losses. 2020, 2045 win. These kind of counteract those losses. I think 2020 still is a good time to trade. Yeah, so okay, that's alright. I'm just going to start being a bit more cautious when I get to see times like this. But also there's quite a bit of momentum hitting the zone. And this was a larger zone too. Normally find those a lower probability anyway, but hey, that's alright, we can't win them all. Alright, next session. Cool. So we got our new swing range here. I'd say this is a good buy zone here. This is like a little internal structure right here. Can already tell this is lining up pretty good. Do we have a LC2A entry here? No. Damn. No. So now we ask ourselves the questions, when can we do a zone? So I'll probably do this zone. This is one as well. I'm just seeing liquidity sitting here as like danger to buy from here. I'm seeing this is a good zone because there's liquidity here. There's been no fake break liquidation, but so we have to wait for that. Okay, is there one here? No, there isn't. Okay, there's been the fake break. Okay, I would now, remembering our former loss, that this is our new zone now, because this zone now has been mitigated. Even though it's done a fake break, I've got to wait for a new fake break now. Okay, and it's outside of our time zone. Next. Price hit this zone exactly to the T on New York, which is great. So in terms of a zone, this would be our next zone. This could be the fake break. I'd say this is a new zone now. Price has hit our zone. What's the fake break? None here. None here. Okay, that's the fake break point. Nothing. Still nothing. It's outside of our trading zone. Next session. Okay. So this was like internal structure. Price has now broken that internal structure. We're now looking for sells. These all look mitigated, which is good. So we look for a sell at around this zone here. This is called like a 1-2 zone, lower probability, but well, I call it a 1-2 zone from just my own back testing and learning. This is a fake break liquidation. What time is it? It is 18:20. Do I want to take this trade? Is it high probability? So this zone here took out this, and it also hit this zone here. This zone up here is still unmitigated. Could we have looked for a sell here? Yep, we could have. Should we take the sell still? It is 1820. 5.5. 10.9. Yeah, I'll take it. I don't care if I keep losing. I've got to take, when I see my trades set up like that, I've got to take them. Does suck losing. Hang on. So 9.7. So it's a 9.7 candle. So if we go 10 pips, 5.5 to that, that's 10.2. 7.2, so that would have been wicked out. So that's a loss. I'm fine with that. I accept that. It looks like we're actually still right in that situation. We were. So we're still right in that situation. We just got wicked out. So that leads me to believe maybe I should be increasing my stop loss size. But in saying that, I've been doing so well profitability wise, I have to just record the data and change my setup if need be. So we're looking at this is the 2nd of August, so I'll add that in there and I'll finish that up as the last trade for the month. Yeah, hang on. Go. 2nd of August, 02/08/22 at 1820. Okay, so that was 9.7. And the stop loss for that, for us to copper win, would have been 1 pip. So it needed to be bigger than 1 pip, so go 1.1 maybe. And then max winning, let's go next session, would have been all the way down here. So that's 82.1. Okay, sweet. So I don't consider this bad trade. Consider this bad trade. Just a slightly larger stop loss may have prevented the loss. Sweet. So obviously that's August. So I'll begin the next video in August. And thank you for watching, guys.